strategies, technology being used to detect, prevent, and of course, respond to the digital fraud. You guessed it right, the next topic is digital fraud suppression. And calling upon, first of all, the moderator, Manoj Agrawal, Group Editor, Banking Frontiers. Can we have a huge round of applause for him? Come on. Next, I'll request and call upon Manish Agrawal, EVP and Head, Credit Intelligence and Control, HDFC Bank. Joining them on stage is Manish Jain, Country Managing Director, Experian India. A huge round of applause for them as well. Come on, everyone. Next, joining us on stage is Satyajeet Kumar, Director, Trust and Safety, Phonepe. Can we have a huge round of applause for Mr. Kumar as well? Requesting and calling upon Sanjiv Dwivedi, Insurance Fraud Prevention Expert, President, Bajaj Allianz. Joining this dynamic team on the stage is Manish, Director, Deloitte, India. Well, such a power-loaded panel discussion, and I think to start with this, let's get going now. We all look forward for in the era where our lives are increasingly online, digital fraud has become a very pervasive threat. Let's get going on this topic.
Thank you so much. Good afternoon, gentlemen and gentlemen on both sides. We have a very, very important topic. I'm sure each of you personally and professionally understand the challenge that is thrown up by the rising amount of fraud, the rising variety of fraud, the rising intensity of fraud that is taking place in the financial system, particularly the banking system. Which does not mean that the other segments, other financial sectors are risk-free, because the fraudsters will look for any opportunity where they can siphon off money. So what I'm going to do, so we have three Manishes just to make sure that you are not confused. We have Manish Jain, Manish Mandhyan, and Manish Agrawal, okay? Even I may get confused, so if I do, then please correct me. I've just had lunch, lekin I have battery fully not charged. It may take some time. I'm going to ask each of our panelists to dive in depth for maybe 5 to 7 minutes on some aspect of digital fraud suppression that they think is really up to date and important and something where some results are being achieved or should be achieved, right? And there's no particular order, but who would like to be the opening batsman here? Anyone? Opening batsman type? Sanjiv?
Yes. Okay. So, good afternoon, everyone. So, good. In fact, I got the chance to start. But as we all know that with the current digital environment with which we are operating, lot of digital transactions, online communications, virtual interactions. This is giving rise to a fertile land for the criminals to operate and do a lot of fraudulent activities. So when it comes to insurance, I'm from insurance background, specifically from non-life. So I would like to highlight the kind of frauds which the industry is currently facing and what all we have been doing, what all are our challenges in terms of where we can use digital platforms to suppress this kind of frauds. So one of the latest example where almost the industry lost more than 1,500 crores of loss within a small segment of fraud which was done. So vehicles which are of high-end vehicles, for example, it's a lorry or a four-wheeler, they took insurance in the name of two-wheeler. So high-end vehicle insurance has been booked in a low-end insurance. So you can understand the difference in the premium. So approximately a lorry would be insured for a cost of around 55,000 rupees and a two-wheeler which is insured for a cost of 1,500 rupees. So you can understand 95% of the premium was siphoned away. Similarly, GST and all for that has been siphoned away. Now, this fraud has become rampant during the COVID scenario because we were not interacting with the customer. We were not meeting with the customer. Entire business was done online. So that gave a good, again, fertile land for the fraudsters to use this opportunity. And to control this, in fact, till that time, we have never imagined that this kind of fraud would happen. So we had to interact with National Informatics System, with the government, and then we got the API integrated where now once a person writes the vehicle number, immediately it identifies the vehicle segment, and then accordingly you have to pay the premium. So this is how we could suppress this. Now, another area which I will tell you, which gives birth to even more kinds of fraud in insurance, because KYC has never been mandated for non-life insurance. So at the time of sourcing, you will never know that he is Manish or he is Manish. Who is Manish? You will not know. So for example, if I go for a treatment in a hospital saying that I am Sanjiv, but actually I am not the insurance, and suppose the policy is been taken by Manish, and I say that he is my brother, and instead of me, he took the treatment, there was no way to identify that he is the same person or not. So that was the kind of losses which we have been bearing till now. Good that KYC got introduced last year, and there onwards, at least this has been started controlling. So most of the bankers would laugh at this kind of scenario. They would feel that KYC has been an age-old scenario for you guys. But for us, we are still living in the past tense, and we have been trying to cope up with this kind of frauds which have been happening. And it's not surprising that most of the general insurance companies today in India are running with a loss of 118%. The combined ratio is approximately 118%. Whereas, and then also when it comes to insurance, we have always been looked after with a thought of that he's an insurance guy, they don't pay the claim. So that is the impression which we carry. And why this impression happened, in fact, just prior to this session we were discussing, where because of this kind of loopholes, the genuine people, we start suspecting many times the genuine people also. And that is one of the reasons why this kind of image keeps on happening for people like us. I will share you another scenario where we also do pet insurance. So pet insurance or cattle insurance. So when we have to ensure that the cattle or the buffalo whom we have insured, whether the claim has come for the same buffalo or not. Because all buffalo look alike. है ना? सब काले रंग का ही दिखता है. And in that scenario, it's actually difficult, and if the tagging has not been done properly, you will not be able to identify whether it's the same cattle or not. Obviously, here I understand the role of digital scenarios will be playing, platforms or companies will be actually, technology will be playing important role to curb the frauds. And there is a lot of opportunity, I wanted to say, for the solution tech companies to come up with, which can help us to identify the correct cattle.
So KYC means know your cattle.
Know your cattle, yes.
For your sector. Okay, who wants to go next? Manish?
I think Manish.
Okay. I'm not a banker, nor am I an insurance company.
Manish Jain from
Experian.
Experian.
So we are an infrastructure company. We're present in over 32 countries. We see fraud at an industry level, at banks, insurance companies, telecom companies, all kind of companies. So I want to use this time to share a perspective. I know the topic for discussion is digital suppression. One thing that we got to watch out is the fraudsters are well researched and ahead of us. Always, they will remain always, because it's a full-time industry. They make a lot more money than any one of us combined make here. There are some interesting trends that we recently published globally. And mule accounts is a thing that almost every banker discusses, right? Before I go into details, I would want you all to remember a couple of words. Arbitrage benefit, all right? Like if anyone is from stock markets, they would understand what that is. Second, any organization which takes money and believes they can have relaxed onboarding, they're mistaken. These are two things you got to remember as the golden rule, because the future of fraud, we are tackling online, and they've already figured out the entire industry is busy tackling online. Branches are cool again, because our branch banking is where we are relaxed. We believe that we have a person representing our organization, interacting with the individual, but at the end of it, you're using technology there as well. But we are relaxing our processes and policies when it comes to branch banking. 2, deposits. We have always believed deposits and insurance, sir, classic example. Getting into financial services, wherever there is an arbitrage benefit, the easiest way to get into financial services industry is opening a savings account, checking account, insurance, investing in stocks and mutual funds. And can you guess, this has become a place where the fraudsters are banking the most. The reason being, all banks are cross-selling on these customers, and they have processes and policies which are, I wouldn't say relaxed, but they are relatively relaxed when it comes to doing KYC or knowing your customer or doing a 360 evaluation of these customers. Then there is this interesting concept, and why I'm saying this is important, because there is a concept which is taking shape of name. Manish and I spent a big conference recently. Pig butchering. Now, pig butchering is a terminology we haven't started hearing, but it is happening. And in a pig butchering, as it means, what does a butcher does? It feeds the pig, makes it fatter, then butcher it to sell, right? We all are subject to being put to pig butchering, because they will entice you to invest in smaller amounts. They getting bigger. So they're building your trust over a period of time, and they vanish. And it is a phenomenon we are seeing all over the world, in all 32 countries. We call it in different shapes and names in every country. Americans love to name their things. So pig butchering is a big thing. Now, coming to liabilities, insurance accounts, there's a concept that some of us in the industry were trying to tackle this as a problem. We're calling it, you got to underwrite every consumer that you onboard. It's just not credit. Because when you say credit underwriting, of course you will do a great job of underwriting, you will assess risk, you will do a lot of things. But when you're saying, I'm going to open a savings account, you're only worried that minimum balance is 10,000 or 5,000 rupees, that my costs are recovered. But it's a virgin space you've created for fraudsters to come camp, create mule accounts. All Jamtara frauds eventually lead, every money that moves goes into an account. I think we have to get to the basics of solving for that. That's first. Second, once if you're not able to arrest the consumers getting in, then our capability to track behavior becomes more important. Behavior on mobile, behavior in accounts, all kinds of behavior. If I go to a website, how many clicks I usually do? Many of them, like I was discussing with sir in the pre-panel, we got a good 2-hour pre-panel discussion. So some of the areas that we were discussing is like insurance companies are still struggling when they transition from forms to digital. Earlier in the form, you rub something, you would know there's something wrong. In a digital environment, how do you do that? Everything is pre-filled, right? But the fact is, there's actually a lot more biometric behavioral information on a website than on a paper. How many clicks I make, where do I go? He will share a story where copy-pasting VPS. Is typing versus copy-pasting. Doesn't mean always a fraud, but it should raise an alert. So I think we got to get to the basics When you open an account, doesn't matter it is for seeking money or giving money, seeking service or giving service, we got to underwrite every individual we interact as a customer. 2, we got to continuously monitor. 3, detect and share across the industry. So we lead the world's largest fraud community, which is called Hunter. India is the largest installation for Experian, but globally as well. You contribute to that ecosystem, you get back much more. Once someone has learned, others don't have to spend time detecting the same individual or the organization.
Sounds good. Sounds interesting. Who wants to go next? Satyajeet or?
Hey.
Can we keep it at 5 minutes?
Sure. I'll try to extend some of things which Manish ji already covered. So one and I represent the payments company. So one of the things that we always are looking at is that it's a very thin ground where on one side you have to be on the right side of the regulation because all of the business lines that we operate in are heavily regulated. So and regulators would always keep consumers' interest at the core of every regulation. So anything that you do has to be right by the customer. On the other side, a big expectation from digital transactions is also that the experience should be no experience. So what I mean to say is that when you are making a payment, you don't want a lot of friction. You don't want to go through multiple steps. And that makes our jobs pretty difficult in detecting or recognizing whether you are a genuine person or you are an imposter, you are using someone else's credentials, you are using someone else's instruments. So at Phonepe, we do evaluate every digital transaction or payment transaction that is going through, and we have to rely on a lot of signals that you have generated on the path of reaching at that stage when you are about to make a payment. So things that you did, and you touched upon, we were discussing this earlier. So we recognize that there is a behavior when you are trying to send money to someone, you typically search for their phone number or you type their VPAs, versus when you're pasting it, where you have copied it from outside our app, that kind of is a red flag. How do we utilize that red flag? It's not always a good red flag to rely on, but I can combine it with other signals on what do you do after that, after making the payment. Do you take any information out from my app? So how do we combine multiple signals to create intelligence, which is actionable? The other aspect I wanted to touch upon, and we're short on time, so I'll rush through it. So one thing that has happened in the digital payment space is that there has been a lot of financial inclusion, but it hasn't come along with a lot of awareness that should have been around it. So you have got access to payment instruments that a lot of users don't really know how to keep the information secure. When someone is calling you, luring into making a very lucrative investment plan, what does it mean? What are the risks associated with it? Would you really make money? Manish also touched upon they trying to make you do small investments, and as your portfolio grows, they vanish. So a lot of times people give into the greed of making quick money, and that kind of hits you big. So as responsible participants in the ecosystem, at Phonepe, we have looked at awareness as one of the core aspects of building consumer experience. So when you transact on Phonepe, and if we kind of assess that you are doing a risky transaction, we try to create nudges through the journey so that you can realize. So you, if all of you are frequent users of our app, you would realize that we throw hurdles which will tell you that this is a risky transaction, you should look at all the details and then go ahead. In some of the cases, when we know that you have already done the payment or you realize later that you have come across a fraudulent situation, how do we make the journey easy for you to report? You should not run behind in multiple places, go to bank, go to cops, but you should be able to do it centrally through our app. So we put a lot of stress in building all those experiences within our app. And whenever we are interacting with regulators as well, we are trying to put it forth that there should be a central effort on creating the right awareness so that we build the first defense when users themselves are aware of how they're transacting, what they're doing. And some nudges here or there will create a lot of impact when we show this. Otherwise, one of the feedback that we get from some of the users, there's no context behind why we showed a particular message. They don't realize it's risky, but we are telling them it's risky. So they want to understand what is the context, the language we used. One of the learnings we had was that we were showing a message which had words which were technical in nature, and it was not very technical if you look at from the financial standpoint. It was debit and credit. Seems simple, but we realize that a lot of users don't understand when we tell them that your account will get debited. But if you tell them the money will leave your account, they understand that.
Plain
So
English.
there are some tweaks that we ended up doing which have impact. So how do we keep looking at these smaller points also to create a larger impact is what we strive on.
Sounds good. I mean, the worst example of is that error 404, which you can't figure out what the hell does it mean, which has become too common. But one small question, is the amount of nudging increasing because of the fraud, or is it under control? Just an overview.
So again, there is, so it depends on how things are trending. We always try to keep it localized. We don't want to build nudges which are happening on all types of payments. So wherever we see, for example, the money doubling is was one of very popular behavior during COVID. Jobs-related scams are also very common, where you start getting texts on WhatsApp, you get calls saying that we are offering a part-time job. You only have to do some clicks on some websites. You have to watch a video. So very simple tasks, but a lot of money that you can make. All of these behaviors, and wherever we see that it can be combined with the payment behavior, that is where we try to create these nudges. So it's very contextual and very localized in terms of our overall payment experience that we try to build.
Makes sense, makes sense. Which Manish wants to go? I think you be the last. Huh? You give the final. Manish, please.
Thanks.
So one thing before. So I just want to make a statutory this thing that all viewpoints shared here are the individual viewpoints and do not necessarily represent what the organizations feel. So please go ahead.
Yeah, thanks for that. So I'm going to give a little bit of a holistic view of digital fraud and suppression, having worked with different clients in the financial services. So from what we're seeing, over the last few years is this whole adoption of digital payments and digital banking and across industries, right? And insurance as well now that we just heard. So with this adoption, what we've also seen, and this was a recent RBI report, that the number of frauds have increased by over 300% over the last year, right? And that's primarily due to the whole quantum and the volumes of payments and the volume of digital onboarding that we're doing. Right, and that's some of the views that were shared over here today as well. And with this sort of an increase in the number of fraud, what we're also seeing a lot of adoption of digital methods to suppress the fraud, which is what we talked about today, right? So in terms of onboarding, whether it's through use of blockchain and AI, making that onboarding process more seamless and more secure, whether it's through detection of fraud behavior through multifaceted approach using behavioral analytics, predictive analytics, and transaction monitoring all working together, right? So that is the journey that we sort of need to be on and that we're seeing, financial services going on. So that is where, I think the real, change is going to come where we start to adopt and generate things like generative AI, which is the sort of talk of this whole sessions today as well, with more adoption of Gen AI and large language models and machine learning. We're going to see a lot of improvement in the kind of frauds that we detect. We're going to see a lot more hit rates, a lot of reduction in negative sort of hits that we get, right? And that's the journey that we see a lot of the clients that we speak to sort of talk about as well nowadays, right? How do we sort of reduce the false positives? How do we make the onboarding a lot more seamless, while at the same time making financial inclusion, at the center of how we do things, right? So what in the end, what's really required is a multifaceted approach. And when we say this to a lot of the people that we talk to, it's across your people, processes, and technology, right? When it comes to people, you have to have the constant awareness, as well as not just your employees but also to the consumers. Make them aware of what are the different frauds that are happening, what are the things that they should be aware of, etc. So that awareness should be continuing. In terms of the processes, there's a lot of room for process re-engineering, re-looking at your legacy processes in terms of, getting them up to making them more efficient, especially when it comes to, things like onboarding, things like doing, fraud monitoring, transaction monitoring, and finally, of course, technology, right? How do you upgrade your existing technologies to be able to detect, these new age frauds as we speak, right? I think Manish mentioned earlier, right, that the fraudsters are always learning and they're always a step ahead of us, right? When it comes to, embracing these kind of technologies, right? Deep fakes, social media, scams, etc. They're always a step ahead. So in order to be able to sort of, get to that stage where, as an industry, we're able to counter and detect these kind of things, we need to be sort of constantly upskilling as well, not just across, not just people, but across people, process, and technologies as well, right? So that's, just...
Okay.
Yeah.
Yeah, thank you, Manish. From Manish Agrawal from HDFC Bank.
Oh,
The big bank picture.
so many things have been spoken. I don't know what to add, what to delete. Yeah, I'm not deleting anything. But I want to just go back to the basics. Okay, so many terminology, NACs, theory, philosophy, approach, data science, AI, everything has come into our discussion in last 20, 25 minutes. Okay. What exactly are we talking? We are talking about a fraud. Okay, fraud is not specific to any banking sector, any insurance sector. Fraud is ultimately a behavior. Okay. Then you can bifurcate or sub-segment them into a various buckets, and then we can define the approach to tackle them. But at the end of the day, fraud is a behavior. Since the conference starts with the word Phonepe, so the finance comes into picture. T, I understand, talks about the technology. Correct? So now, if you look the larger picture, the fraud is not anything which is new. This was there, this is here, and this is going to stay. Okay. If any of us believe that this can be eradicated, answer is no. Till the time the mankind will exist on this planet Earth, I believe the fraud will exist. So all the fraud professionals can be very, very happy that their job is going to exist. Okay. At the same time, if we talk about the frauds, okay, in our parallels, since we have the banking sector, insurance sector, etc., the fraud can be classified into only two categories. One is the first-party fraud, second is a third-party fraud. Okay, first-party fraud is a fraud, so that the conventional method of a fraud that we had, that when a customer is coming in for an application of a loan, okay, he is trying to defraud the bank or a financial institution, whereby he wants to avail the facility by impersonating or submitting the falsified information. See the numbers. See the numbers. Okay. So the point is, that's the third-party fraud, and we loosely term it as a hack. Trust me, there is no hack. If there is a hack, the hack is of a mind of a customer, mind of a victim. Because the resilience and the operating system that we currently have in the country, thanks to the regulator, is so foolproof that we have not seen that somebody has penetrated the banking system of any and I'm talking any and every banking sector or a financial institution, and have withdrawn or transferred the funds. Definitely, you have one or two cases, those are the cyber security risk, not the digital fraud risk. Okay. So we are talking about a third-party fraud. Why it is getting more complex is, and the point which Mr. Jain touched upon, that the fraudsters are open in olden days. If somebody had to do a fraud, either he had to part with the assets, or in case he had to do a fraud by swindling money, he had to take cash from your possession to a large extent. Today, we are in a digital world. A cash partition is not happening. So what's actually happening? The money which is getting defrauded, ultimately is going into the banking system itself at a first port of call. From there, it is going out, either by way of e-commerce or by way of ATM withdrawal or a cash withdrawal. Okay. So the complexity which has increased because in today's, other than the first party conventional fraud for the banks and the financial institution, you have got a first and third party mix. Okay. A third party will be defrauding a first party where somewhere he would have become a first party for parting the money. So very confusing statement, like some of the videos. I'm sure you will correlate what I mean to say. But this is the current state of affairs. What we need, and I would want to. I'm aware about the time, and I would want to touch upon only one point. The system is not getting hacked. It's an individual who are getting hacked. So please pause. The best resilience for this we have is a pause. We are multitasking individuals now. At any given point of time, we are doing 20 things, including making payment to somebody who has just sent you a message saying that, okay, my father is admitted to the hospital. I will say, please just WhatsApp me the money. And you have not even seen the WhatsApp number. You have only seen the photo, and the photo resembles to your friend. Pause. And I think if we are able to institute this word pause as a fact of awareness, your 80% frauds will reduce. Then what we need to do is for the remaining 20%, and there definitely the technology will come into place, generative AI will come into place, but the basic premise of a pause is something which I would say that is very, very important.
So pause is like breathing. This yoga guru says, take a breath, then pause. Pause nahi karega to fayda nahi hoga, I think. So thank you, gentlemen. Like to close at this time. Thank you for insights on KYC, on pause, on liability underwriting, on nudging, on generative AI. I think our panelists have touched on some very fruitful areas. I invite you to give them the due recognition for sharing insights with us.